Cost of living crisis just took a new turn. The Bank of England's base rate just went up by 0.5% last week. That means it's now at 1.75%, which is the highest it's been in 27 years. So most people are looking to switch rates. Actually, is that the right thing to do? Hi, I'm Jenny from Your Mortgage Hub, and I'm here to help those starting out or starting over with your mortgage applications by showing you what you should and shouldn't be doing when it comes to applying for a mortgage. Over the weekend, I've had massive inquiries asking me, Jenny, should I just pay my penalties and switch deal now before the rates increase even further? And the truth of the matter is, it's usually not cost effective to jump ship and pay the early repayment charges. And the reason for that is if you've got a £3,000 early repayment charge and you've got, say, 12 months left of your current deal, you need to save £3,000 within that 12 months to make it cost effective to move. And usually that's not the case. Plus, if you haven't got that £3,000 cash to pay off those penalties, the likelihood is you're going to add that onto your mortgage, and that's going to increase the interest you have to pay. So it's not just the 3,000, it's the 3,000 plus the interest you have to pay. So what I'm suggesting to everyone is that you prepare to switch, but you don't panic switch. So this is looking at your outgoings. Has anything changed recently which could then stop you getting the best deal? And have you got time to get that rectified? It's all about working that all out now so that when it is the right time for you to switch, you're in the best possible position to do that. So here are the 4 things I think everyone should be doing in preparation to switching their deal. Number 1, you need to be contacting your mortgage broker at least 6 months before your current deal ends. They're going to make sure they can search the whole of the market and find the right rate for you. It may be that you stay with your current lender. Usually most lenders allow you to switch within 3 months, but where the rates are, most people are seeing the end of the deal off. If you switch, if you contact your mortgage broker within 6 months, they can secure those rates at that time, and then we can just sit on it for 6 months, and whatever happens in the market, you've got the peace of mind. It's not going to impact on your mortgage offer. Number 2, you need to understand what your current deal is. So you need to understand what your mortgage balance is, what your term is, so how many years you've got left. Do you have any early repayment charges? If so, what are they and how much is it going to cost you? If you don't understand what you've currently got, then how can we work out if it's right for you to switch or stay where you are? So contact your mortgage broker, contact your mortgage lender if you don't have a copy of your offer. It will all be on there, but sometimes the figures can be a bit screwy. So best thing to do is contact your lender. They can give you that information over the phone. Number 3, you really need to think about your product term. So many people are just saying to me, Jen, I just want a 5-year fixed rate. And then I say to them, well, what are you going to do in 2 years? What are you going to do in 3 years? Oh, well, we want to move home then, or maybe we're going to have a child. So actually fixing into that 5-year fixed rate that everyone seems to be so passionate about doing at the moment might not be right for you. So it's really important that you look at your options. You look at what you're doing in the next 2, 3, 5, and even 10 years. And you need to match your mortgage product to what your personal circumstances are. Don't get up in the run. Everyone wants these 5-year fixed rates because actually it might not be right for you and you could end up paying higher penalties in the future. Number 4, you need to prepare to switch, but you don't need to panic switch. So when I say prepared to switch, if you've took maybe a little bit more extra credit on your credit cards, we need to look at reducing them down so we meet the lender's affordability. Maybe you've had a change in your income and that's increased. We need to look at that. And is there any way that we can use that to support your mortgage and get you a better rate? So don't panic switch, but prepare to switch. Look at your income and your outgoings. Is there anything that you can do to put yourself in a better position so when when your rate comes to an end, you are perfectly positioned to get the right rate for you? So the 4 things I think everyone should be doing when considering switching your deal is 1, you contact your mortgage broker 6 months before the deal comes to an end. Number 2, you understand what your current deal is. What is your balance? What is your mortgage term? What are your early repayment charges? Number 3, you really start to think about your product term and what's right for you now and in the future. And number 4, don't panic switch, but prepare to switch. If you've got increased outgoings, is there anything you can do to reduce those down so you're in the right position to switch? So if your deal's coming to an end and you want me to have a look at it, just drop me a message below and we can book in a mortgage discovery call. And if you want more hints and tips on what you should and shouldn't be doing when it comes to applying for a mortgage, check out my page.